Well, hi, and welcome to the live version of the Real Estate Rundown. I'm Ayvrie Dixon with the Green Door Group, and my special guest today is Ali Maldonado with APMC, American Portfolio Mortgage Company. And we're just going to have a chat, talk about some mortgage stuff, get to know Ali a little bit, and give you some great information about this market and what's happening right now, and how either you as an agent can guide your buyers to an amazing mortgage lender here, or if you are looking to buy or sell, we'll talk a little bit about that too. So thanks for joining us today. Ali, I just want you to start out by telling us a little bit about yourself. Where are you from? How'd you get here? Why mortgage?
Yeah, that's a loaded question. No. My name is Ali Maldonado. I'm originally from Dalhart, Texas, a little bitty town north of here. I moved to Canyon actually for college, and I met the love of my life there. Corey, and we have two witty bitty babies, Sailor, who is 3, and then Chloe, who is actually 5 months old today. Absolute light of our lives and our purpose. Show up every day for those littles. And why mortgage? Well, I kind of fell into that, honestly. Through real estate and mortgage lending, I have a combined years of about 10 years, 6 years being on the real estate side, 4 years now on the lending side. I started real estate with my father-in-law. Back in the day, I was always really interested in it. He kind of showed me the ropes, taught me a lot of the things that I do know today. And then I started seeking a salaried position. It was 2020, so it was like really hard to capture a contract with, somebody going financing. Everybody was taking cash offers. So, being a baby agent, it was like, oh, okay, this is a little rough. So I was like, you know what, I'm going to go seek a salary somewhere. And I got a job, and I learned the ropes on the mortgage lending side. And at the time I was bringing some, because as a real estate agent, really I noticed that there was like a gap. I'm like, the service on the lending side can be better. And as a real estate agent, I never had that go-to lender. That person that I was like, oh, they're going to 100% take care of my clients. Or that I was like, I can predict what their next move is because we've done so much business together. I know what they're going to ask and be able to tee up those conversations. So when I got into the lending side and I saw how my boss at the time was handling the transactions and stuff, I was like, oh my gosh, Amarillo needs this. And so I started bringing people from Amarillo to him. And at one point he was just like, look, you don't need to be doing this for me anymore. You need to be doing this for yourself. So he kind of just kicked me out of the nest and was like, go do it for yourself. So joke's on me. I left a commissioned job for a salary job and ended up commission again. So, but God's hand was definitely in that because I love what I do. I absolutely love helping families and individuals and business owners achieve the dream of homeownership. So it's good stuff.
Yeah,
so.
Well, you're really good at it too, so
thanks,
that's
friend.
even better.
Yeah, I have a great team behind me. I think that's what makes a difference. It's not just me. There's so many people behind me that support me and encourage me to do better and learn more and build on it. And I think that makes all the world of a difference.
Absolutely.
For sure.
You have a whole team, Ali.
Yeah, a whole team, Ali. Yeah, which is crazy being so early in my career, but they were like, yeah, we're going to help you build this thing. Like, let's do it. And now we have a branch here in Amarillo, and I have another loan officer, Chandler, in my office, and we're just kind of doing our thing. Kind of been able to show her the ropes, too, on how we do things. And I think it's superb the way that we do it. So there's definitely a standard there.
Yeah.
So things start, because real estate, it's cyclical. There's there's a lot, and then there's a lot of moving parts too. With a lot of moving parts, obviously there are things that happen, but I truly believe that it's about how you handle those situations. Like for me, I absolutely hate making a phone call to an agent or to a borrower without some form of solution. Hey, we have a problem, but here's the solution. This is what I thought about it. And I learned that from my team. They taught me those things. Yeah. So just having those people back me up and help me through those things has been definitely a big help.
Yeah,
so,
that's good.
Yeah. And then, of course, having great agents behind me, too. So
Yeah.
makes a huge difference.
It's good to have a great circle of people who
Oh,
are
for
all
sure.
going for the same
Yeah.
purpose and goals and working together instead of against each other.
Or
for
like
sure.
building each other's businesses. It's not just
Absolutely.
like, hey, Allie, what can you do for me? It's more like, hey, how can we do this together? How can we build each other's businesses? And I definitely feel like Green Door has helped my business a lot. So
That's been good.
Yeah.
You've helped ours for sure.
thanks.
Absolutely.
Appreciate that.
Okay, so speaking of cyclical
Yeah.
real estate,
Yeah.
what do you see in the market right now? What are some
It's
interest rate
moving.
things? And
Yeah, I mean, at least for me, I know on my side of things have picked up a lot. I feel like Green Door has picked up a lot too. And I mean, business is moving. Interest rates obviously have come down. Last week with the feds and stuff coming out saying things, obviously we took a little bit of a step back, but nothing too scary. I mean, rates are important. Don't get me wrong. Rates are absolutely important, but they're not everything. If you have an amazing team behind you, then they can help you figure out different avenues to still get into a home. So, interest rates right now, obviously, that's a loaded question. What? What? Who would have thought? No, it's the same for everybody.
It's the same for
Everyone gets the same interest rate. No, credit scores, debt to income ratio, credit history. If there's a co-buyer or a co-signer, I mean, like, there's all sorts of different things. If it's an investment property, primary, secondary. All of those, but we're looking mid-5s, low-6s, somewhere in there typically. Unless you're going down payment assistance, even at down payment assistance, you're still looking at mid-6s, maybe higher 6s.
but not 6, 7.
Not 6, 7. Oh
How
my
do you get
gosh.
that in there? We're so funny.
We're young and hip.
My goodness.
When your 3-year-old comes in because your brother-in-law taught her 6, 7 over the weekend, and that's all she can say.
Yeah.
No, that's a lot.
But not 6, 7 interest rates.
No,
but 5,
absolutely
6
not.
interest rates.
Yeah. I really wanted to make a Halloween joke of spooky interest rates, but
Oh.
I didn't. I should have. Definitely should
Next year.
Next year. Remember that. Don't
Yeah.
steal that. I'm just kidding.
Yeah, that's awesome.
Yeah.
Okay, so you mentioned the Fed as well. Kind of touch on what that means for the real estate market when the Feds do something and interest rates
Yeah.
don't necessarily mirror that.
Right.
Why not?
Exactly. Yeah. They're not really. They are tied together, but not tit for tat. If that makes sense. Like, because the mortgage rates are really based off of the 10-year Treasury, so they're more like bond related, and that's a whole other rabbit hole that I will save you the time on. But just because the Fed say something doesn't necessarily mean that that's how the mortgage sides or mortgage rates are going to reflect. Especially, it depends a lot on the verbiage, and then of course what the job reports and all other reports, how those reflect, and how that's going to affect us and our economy in 10 years or so. So, yeah, they don't always go together. How many phone calls I get, they're like, Feds are coming out today, what are they going to do? And I'm like, I don't know, but we'll just see how the market reacts to it too. So, because it's based off of those reports, but it's also based off of the economist and how they feel that's going to affect our economy as a whole. So, if you're holding out for 2 or 3% interest rates, I hope you and I do not see that again in our lifetime, because that just means that our economy is struggling elsewhere. So a lot of people don't understand that that's kind of how that works. 6, 7, that's how that works. So every time that I do this, that's what I think of. But yeah, it's not just because the Fed said that's how it's going to react.
Right.
So, but if you have a good loan officer, they definitely do their research on mortgage-backed securities, and they do have alerts on all of your files, and they're able to educate you and help you when the Feds do come out.
Yeah, it's good. So just important to note that the interest rate and what the Feds are doing, yes, as you said, they have correlation, but one doesn't necessarily impact the other immediately for our ability to help clients get into homes, get their mortgages.
It's overnight for banks immediately, but for a consumer, how is that going to reflect in like 10 years? So that's how they kind of correlate there.
Yes, absolutely. Okay, so talk a little bit about the process for getting an approval for a mortgage and kind of some of the most common mortgage products that are out there.
Ooh, okay, good one. Okay, well, for how my team goes about it is like we'll get in an application, or we'll get like a contact information from you guys, and we'll kind of direct how you as a consumer feel most comfortable filling out an application because, of course, it is going to ask you personal information. So over the phone, if that's how you feel, if you're like, I do not want to mess with that computer, I do not want to do it, then we can do it that way. Or obviously we have an online app, or you can obviously do it on a browser. After you fill out the application, which is very, very simple, a lot of people get very intimidated by it, but first name, last name, social, date of birth, where you lived at, and where you've worked at for the last 2 years. That's really what we're asking. And I like to say we've got to have a full meal to make a decision for you, help you make a decision, what products are available for you. So we have to have the sides, right? That's my favorite part. But we have to have the documents to back up what you put on the application. So to give you the best shot and give you the best information and the education to make a decision, we have to have those documents to be able to issue a pre-approval. So if your lender is not getting back to you, it's probably because you haven't uploaded your pay stubs. Make sure to do that because that's super, super important. And then in terms of, well, after that, I guess you go through the application process. We'll say, okay, you are approved. Now let's set up a consultation. During those consultations, I take those very, very seriously. I take them very seriously because there's a lot of things in this industry that we cannot control.
Right.
Interest rates being one. But what I can control is the education and the experience. And so I lean very hard into those. And the experience starts with the education. So it's not my job to decide which program you need to go with for sure. It's my job to narrow it down for you, talk you through the differences, and then you or your family unit can decide what is best for you. I'll walk you through all the different things, if you're going to go down payment assistance or if you're not, if you're going to go an ARM, 15-year, 30-year, whatever it may be. Then we kind of decide that. You go under contract, we start gathering conditions, and then once those conditions and appraisal have been met, closing day. I mean, we just got to really meet all of those conditions and then work really closely with realtors to get that done. Realtors play a huge part in helping us gather everything. So, and then happy homeowner.
Woohoo!
Yeah.
Yeah.
So, as for my company, we've got all sorts of programs. If you know about it, we probably got it. Yeah, if you don't know about it, we probably got it. But yeah, we've got everything: USDA, VA, FHA, conventional, bank statement loans, asset depletion, DSCR, I-10. I mean, the list will go on and on. I mean, all the things. So I encourage you, if you're just even thinking about homeownership and you think that it may be impossible, just holler at us. Like, I don't know how many times we've had so many success stories of people just being like, I didn't think this was even possible. Like, thank you so much. I had somebody, I don't know, like maybe a month or two ago now, this family was denied. They were self-employed, and they were denied by 3 other lenders in town.
Wow.
And we were able to get it across the finish line. And I think that's so huge. You know, you're a young family, you've got littles, and you've thought of this dream of having a home, but you also built a business, and it's like you had to sacrifice the home for the business, and it's like, no, like you can do both. It truly matters who you work with.
Yeah.
That's for sure.
Yeah, absolutely.
Yeah.
Talk a little bit about the money that might be required from a buyer to bring to the table.
Yeah, so I'm going to do the thing again. The main thing that I think people get confused, especially as first-time home buyers, is your down payment and your closing costs are 2 separate things. So depending on which program you go with, I mean, that could start at 0% down if you're going to go VA or USDA or down payment assistance. But then the other side of that we have to worry about is those closing costs. So in those closing costs, depending on what program you go with, you can get that negotiated into the contract. And that's how I try to help our agents say, okay, based off of underwriting, this is how much assistance they can get from the seller. And I try and map that out really nicely so y'all have an understanding as well as the borrower knows. Because I want everybody not only to be mentally prepared, but financially prepared. Like, this is what we're walking into. So depending on what program you go into, depends on the down payment. So, but the closing costs, we have to worry about that too. So I think those are the 2 really big important things of figuring out what you need.
Yes, absolutely.
Yeah.
What is a max percentage amount that a seller could give, or that could come from down payment assistance?
Oh, so that, again, that also really loaded question. You're full of them today. No, I'm just kidding.
Yeah.
So FHA is usually 3.5% down standard, conventional 5%, 10%, just whatever you really want to do. But conventional, it goes up in increments of 3, 6, 9, depending on how much you put down. But when it comes to down payment assistance, we got to be really careful, because sometimes underwriting is like, whoa, they need some skin in the game, because you may need a 600 or 620 on your credit score, depending on the history there, and depending on which program you go with. But you can't. Sometimes if you're like right on the cusp. Underwriting they want you to have some skin in the game.
Yeah.
Right? So you can't get all of your down payment closed from down payment assistance and all of it covered from the seller. Sometimes underwriting wants you to have some skin in the game, even if it's just reserves. So reserves is another common thing that a lot of people don't understand. Reserves is money set aside that we're not necessarily using for the transaction.
Okay.
But what it does is it tells the underwriters, it says, hey, I understand I'm right on the cusp, and I know that I'm asking for a lot from everybody, but if something was to happen, I have this money to fall back on. I can make this mortgage payment. I'm not as big of a risk as you think I am, because I have this money set aside in a 401k, IRA, whatever it may be. As long as you can liquidate it, we can use it. So if your loan officer asks you for a 401k, that's probably what they're doing. They're trying to, because they're trying to lower the risk. Because if they lower the risk, they'll lower the interest rate.
Right.
So they're just doing their job. So I hope that answers that question.
Yeah, no, absolutely. That's really good. What are some expectations that a buyer should have of a mortgage company?
Oh, that's a really good one. First red flag, if they only give you one option, red flag. I will die on this hill. It is not our job to decide exactly what program you need to go to. We need to help you navigate it, and show you the pros and show you the cons and educate you. But if they just slide a paper right in front of you and say, here you go, you're approved. Whoa, what am I doing? So red flag. So have those expectations. Ask them to explain things to you. Break down the closing costs for me, because a lot of people, I hear it almost every day. I got a really awesome interest rate. Cool. You have a loan estimate? Because I'll show you where those fees are. Especially if you're like, I have a 3.99. I'm like, whoa, you're paying some serious money. And they're like, no, we're not. I'm like, I promise you, you asked for a loan estimate. Find points in this section. I promise you it's there. And then they're like, they'll call me back and they're like, oh my gosh, Ellie, you were so right. And I'm like, oh yeah. Yeah, it happens. That is scary from the very beginning. If your loan officer is not being truthful from you from the get-go, what else is there that they are not disclosing to you? It's illegal, first and foremost. But second, also that's just really scary. I like to sleep at night, so I like to tell you what you're getting into. Especially as a real estate agent, I hated that. I hated that so much when we were at the closing table, and the borrower had a question, and they were like, "Wait, I have a second lien on my property. What is that? Why is that?" And I'm like, "Wait, you don't know?"
Yeah.
And then as a realtor, I'm like, "I don't know. I don't know what program you got into."
Right.
And so that's why I go to a lot of my closings, like 99% of them, is because I want you from start to end to know that I'm there for you. Any questions that you have, I'm there to help navigate them. So I may not know all of the questions because, again, real estate changes all day, every day. As soon as you get comfortable, they change a guideline.
Yeah, they do.
Yeah. But, again, I have an amazing team that's behind me that I can call and ask. No big deal.
Yes.
So, but, yeah, red flag there. Other expectations, is that what we were going over? I guess just from a lending side, the expectation is just be as truthful as you possibly can on your application, because we will find it.
True story.
You own a house in Colorado, we will find it. You got a loan for your down payment, we will find it. There's all sorts of, you quit your job, we will find that out too.
Oh gosh.
Yeah, I, no joke, had a guy one time that we were a few days before closing, and he bought a $3,000 refrigerator at Lowe's. 0% interest. But they pulled his credit and blew his DTI lowered his credit score.
Oh, no.
And literal definition of cart before the horse.
Yeah.
He has a wonderful refrigerator, but he does not have a home. So,
Oh, yeah, that stinks.
yeah.
Those
so
are the horror stories.
just proper expectations should be set from your lender. I know I do the do's and the don'ts. We can do this, but we can't do that. And I'm very honest. I'm very upfront about things. I will very much tell you we can do this, but we're having ramen noodles. Like, do not spend your money. You know, this is where this needs to be. Okay, and if you're open to that, open to the conversation, and like, okay, I can do this, then it could totally be possible.
Yeah.
So yeah, it's good.
You hit on it a little bit, but what are some expectations that a mortgage company has of their buyers?
Yeah, so you're talking about like quitting your job and
Right,
stuff like that?
yes.
Yeah, don't quit your job. So about 10 days before closing, we're going to call your boss and we're going to say, hey, do you still work there? And if they say no, problem, huge problem. Another thing too, a lot of people think that they have to be at the same job for 2 years consistently. No, it's just 2 years worth of history. So even if you're fresh out of high school, we can use that education for history as long as you have a W-2 job or you have been self-employed for 2 years, then we can use that income. So don't quit your job, first and foremost. Large deposits. Don't just go and dump large amount of money into your bank account. You know, if you have a garage sale and you just have super big success, don't drop $10,000 into your bank account, because we're going to ask you where that came from, and I doubt you got receipts for everything that you sold at your garage sale. So if you're like, hey, I have this money, my great aunt is going to be giving it to me, tell your loan officer those things, tell your realtor those things. That way we can help guide you, because we just need to get it's not as invasive as a lot of people think. We'll walk you through that process. Most of the time it's just a gift letter or a wire straight to the title company. So where the issue comes in is where it's like, okay, my great aunt gave it to me, and then I put it into my savings account, and then we were gonna use it for the down payment and closing costs, so I moved it to my checking account. And so great aunt gave it to me, so now we need her bank statement, now we need your savings bank statement, and now we need your checking account, when we could have just wired it directly to the title company and gotten a gift letter and moved on.
Yeah.
So be very honest and open about where those funds are going to be coming from. That's super, super huge. And then, of course, disclose any properties that you do have, because we will find them. Even if they're owned free and clear, we need to show that they're free and clear. We need to show that there's no liens on them. So if you have the deed to that, just obviously provide that. And then we're going to be asking you for taxes and insurance on those, because those do play a role into what your debt to income ratio is. So those are probably the biggest ones. Can you think of any others?
Those are on my list,
Those
for
are
sure.
the list. Yeah, those are the big ones.
Those are the big ones, yeah.
Just be honest, and we can help. Yeah.
What might be the difference between a traditional residential buyer or an investor buyer for some of that expectation?
Yeah, so a lot of people too think that you're going to get the same interest rates on an investment property as you do a primary, which is not the case. So primary, I mean, it could be 0%, 3.5%, 5%. Secondary, it automatically starts at 10, so it already jumps up 10%. Investment properties, there's some investors that will do it at 15%, but your pricing, otherwise known as your interest rate, is pretty ugly, and you are carrying mortgage insurance. So if you are trying to get an investment property, it's always good to have the mindset of having 20% down. And then if you can, in most cases, it's better for you to put 25% down, just because you're going to save on that interest rate side. Because again, it lowers the risk profile. Yeah. So, yeah.
Yeah, good. And I know that you've got a couple of, like the DSCR program. Is there another one?
Yeah, there's I-10, and there's all sorts of different programs there. And DACA, I mean, the list goes on and on. So that's a rabbit hole you go down. For sure. That's a whole other podcast.
That's good. Well, what you're really saying is that your company has the ability to offer diversity for any kind of
Oh, yeah. If you are like,
interest.
I think I want to buy a house, holler. Let us dive into it. Just obviously be forthcoming with all of the information, and then we can kind of figure out what program is available. A lot of people think too, I'm self-employed, that they're not going to want to mess with it. Challenge accepted. Let's do it.
Yes,
so I
that's
just
good.
closed one a month ago, maybe, FHA, 1-year tax return.
Oh, wow.
Crazy. It was awesome. I mean, he had a really great business, don't get me wrong, but it was absolutely fantastic. Like, it was like, okay, we made this happen. And just like the other family that was denied by 3 other lenders, it was like, yes, we did that. Like, that's awesome. So,
Yes, that's good.
yeah. Even where it got down to like Corpus Christi and stuff, one of my realtors was like, hey, there's somebody that needs help down there. Can you? I'm like, absolutely, we can. Yeah.
Yeah.
And I'm like, y'all had to come all the way to Amarillo, Texas to get your financing, but we did it. You know, it was super exciting. So.
Yeah, that's awesome.
Yeah, they did a bridge loan actually.
Oh, nice. Yeah.
So we have bridge loans too. So, yeah, good stuff.
Yeah, lots of good options with that.
So many options.
Yeah.
So many options.
What would you consider to be your favorite part about working in mortgage?
Oh, wow, that list goes on. It's a hard industry. It is a very hard industry to be in because you get very attached. You're like, oh, I want to help them so bad. I want to help them. I want to help them. I want to help them. But especially if somebody comes with like credit repair and it's like, hey, I can give you all the tools and all the education, but unless you do it or take the advice, I can't help you outside of that. Like, I can point you to the people who can help you, and I can give you the algorithms, and I can run it all for you and say, hey, this is what you need to do. But unless you do it, I can't really help you.
Yeah.
But those success stories that they come back and they're like, oh my gosh, I did what you said. I'm like, amazing.
Yes.
We did it. You know, I had a single mama. Well, she's actually a widow.
Oh, gosh.
And her daughter is about 6 months younger than my oldest daughter. And she said that she sat at her husband's funeral and told her daughter that she was going to make it. She was going to buy a home and she was going to do it and show her that a single mama can do it. And she had some credit repair that she needed to do. And it took us, I don't know, I want to say it was like 4 or 5 months. I originally quoted her like, hey, it's going to be like probably 6 months. Like, and she was like, I don't care, whatever it takes. And we just stayed in constant communication. I was her little cheerleader on the sideline. And she purchased a home all on her own.
Awesome.
And was able to provide that for her daughter and show her. And she's little now, but, you know, in a few years, she's going to understand that and appreciate that her mom did everything that she could.
Absolutely.
So those are huge wins. That's a part that I really love. I also really, really love first-time home buyers.
Yeah.
Because at least in my generation, it was my parents, love you, Mom, but purchasing a home was hard. You know, it was interest rates are 10, 12, whatever %, and we had to have this big amount of money down. It was just impossible, and, you know, or even talking to grandparents, they're like, we're in the same house because that was the worst experience I had ever done in my entire life. But then they're also like, I bought our house for $48,000, and I'm like, what are you complaining about? But it's just changing that narrative, saying it's not that hard.
Yeah.
You know, I even have borrowers that are like, hi, what else do we need to do? And I'm like, we're just hanging out. The seller's not ready. We are ready. Your documents are at title. We're just hanging out. I had one that was, we closed last week that we were cleared to close 21 days early.
Wow.
And the seller was like, we have nowhere to go. We can't do that. And I was like, oh, is your lender not doing that? Shoot. No. But, you know, we just kind of hung out and they were like, you sure we don't need to do anything? And it's like, we've done everything. It doesn't have to be hard. If you're open and honest and you listen, and you take the advice from your realtor and your mortgage lender, I mean, it can be a really easy transaction. So I think just flipping that narrative is huge too. So
Yeah, it's awesome.
yeah.
So how do they contact you?
Oh yes. I think my contact information is going to be at the end of this, but that is my personal cell phone. I work Monday through Sunday, even after 5 o'clock. I do have 2 little ones, so as long as you don't mind little rugrats in the background, most of the time I will answer, unless it's bedtime. Then obviously you gotta get the kiddos to sleep. But I'm just a quick text message away. So you can reach me at 806-683-7440.
Awesome. And if you've got questions, we're going to have the recording of this, and you're welcome to put questions in the chat. You're welcome to reach out to Allie or myself directly and ask any questions. If you, as Allie said, if you've been on the fence thinking about, I don't know if we can do this or not, let's start the conversation. I think there's a lot of hope for you in whatever situation you have to either know that there's a product that you can be approved for right now, or you're going to have a team on your side who is fighting for you to get to that point sooner than later.
Yeah. And with our application, there's no credit obligation. We just do soft pulls. So if you're just even curious about it, let's chat about it, have you fill out an application. We'll give it the big old look and say, hey, this is where you need to be, or this is where that improvement needs to take. And you won't even know that you will, because you give us permission to poke and prod in your credit, but you're not going to have a hard pull on your credit and think that it's going to drop it. So it is much easier than you think.
Yeah, awesome. I love that. Well, thanks for joining us today. Thanks for listening in to our great conversation with Allie. And again, if you've got questions, we'd love to answer them for you. We're here for you. So thanks for joining us in the Real Estate Rundown, and we'll see you next time.
From the